Yeah. Can we do Amazon as that is on Thursday?
Yeah, that's the one. I'm way longer Amazon than I am Nvidia. So this one, I think I measured this. Amazon has an average move of like 7%, I believe. I don't know what's priced in right now. So 7% downside is about the 220s, which is where I bought it basically last time. Upside is my first target at 290, 259, which is about like just under 7% downside or upside. And so in either case,
timer. There you go.
Got it. In either case, quite frankly, this doesn't do much to the chart. This is very similar to how Tesla was coming into earnings, how AMD was coming into earnings to me. Wherever this goes, it doesn't really do anything to the chart. Either we're retesting support down here or we're retesting resistance up here. I don't see it breaking through to 300 on earnings. I just don't see that happening. And so for that reason, I have short calls up here also, which I think I talked about last week. Actually, yeah, for sure I talked about last week. So that would be my target anyways from an extended move beyond earnings. It was just not normal for Amazon to go this high on an actual earnings report. But again, if it did, that's as much as I would expect. But downside here is going to be in the 220s. It doesn't lose its trend. So the reason I'm saying whatever happens isn't going to make a big difference from the overall trend is because Amazon it's decidedly also in consolidation right now. So if this is where we are, meaning like I could take this and we could say, hey, look, this very near term consolidation from, this kind of triangle consolidation, the low end of that consolidation is in the 220s, which is exactly where it was just the other day. And the high end is going to be up here where, quite frankly, again, where we were just the other day. Best case scenario, Amazon goes higher, but, I would not be surprised for this to potentially go nowhere. I don't want to speak my book. I'm long Amazon. I think it does good. But I've been wrong a lot of times for a lot of things. So don't listen to me. Don't do whatever I'm doing. But what I can say is even if this does drop to 220, it's not going to break the broad trend. It's just going to be back to support. If this is below 215, that is a different story. And again, that would be my stop right here on equity or whatever. From a trading perspective, equity options would be pretty much toasted by that point. But from any equity traders, if you're trading in that area and this loses 215, yeah, careful because we're looking at 185s, which would retest this area.
Google.
Otherwise, I like it to threes.
Google. Google obviously is at all-time highs, whereas Amazon is not.
Correct.
For anyone who wants to buy into earnings on Google, does the technicals even look like it's worth taking a shot there?
So yes, but I never use technicals for earnings. Like you don't want to, and we talked about this before, like you don't want to use technicals when it comes to earnings trades because fundamentals supersede technicals during an earnings report. Fundamentals reign, crazy things happen. And also never look at the stock price after hours. You can celebrate, but there's nothing for us except for lies and deceit after market. But there's a lot of times when you see this, technically speaking, it's a break. It's a break retest. Like, what's the word? I'm having a brain fart right now. This is technically sound, but there's nothing wrong with this, right? So breakout retest here. Base, break and base. Geez, Jiminy Crikey, that's what I was looking for. So break, base here. You should be going this way. But the second that this earnings report comes out tomorrow, that's going to supersede this technical breakout. So forget about it. And forget about using technicals because if this does go, what I can say is that the extension here is 360 to 370s. Right in this area, upside. Downside though, if Google doesn't deliver, the downside here is heavy. So you have asymmetric risk, if you will. So like it's trending, so you don't want to fight that trend per se. I just, if this, and I don't think that they're not going to do well. I think realistically, this one maybe goes sideways and then eventually goes back up. So I wouldn't take that asymmetric risk on earnings. Like you couldn't pay me to do that. No freaking shot. But what is Googly typically move?
By the way, real quick, USAR is down 3% after hours. They have filed for an offering of 76 million shares.
Well, so 5.8% expected move, 5.2% average move. So your options. All right, I'm not going to talk about options. You don't want to take options because those are overpriced. But 5% downside is going to be what? On average? Yeah, let's say it even has 311 is your typical pullback. That's even 8%. That's more than the average move on Google. We've been seeing some pretty big moves. So I think that's your downside here with an upside of 370, maybe. So I would give it about 8% actually this quarter in either direction. But I just would keep this at 370. 300. So like if it loses 325s, give or take, you're probably going to see sub 300s again. And for the next 3 months after the earnings report, stocks typically trend in 3-month cycles near term. So from whatever this earnings report is, if it's a bad reaction, a bad market reaction, it's probably going to spend the next 3 months finding support, which, if you're a trader, that could be a while. That could be a while, but it still remains, if you lose 300, which it's not going to lose 300 on earnings, but if it were to do that at some point after earnings, at that point it's 240 to the downside. In the meantime, I think like 315s are your near-term downside, and then 370s are near-term upside for the actual report.